Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to run through how ETFs can be traded with simple technical indicators that are available for free with any broker or charting platform. The setups and methodology I'm going to show you are explained in detail in my Masterclass on trading, which is available at the link below this video. All right, let's get to it. Let's go through a couple of very simple examples. All right, here is SOXS. It's the inverse leveraged semiconductor ETF. Okay, let's go through it. So you can see it was pretty weak, trending down because the market was doing well. This stock bottomed and started coming up, and the MACD crossed up. There was one more dip. Okay, and during that dip, the MACD stayed positive here. You could see that, while the stochastic cycled down and then curled back up. Okay, so the MACD stayed positive and the stochastic cycled down. So the MACD I consider to be the trend, and the stochastic is a timing mechanism within the trend. And then you could see the stock went up from there, and on a percentage basis, the stock moved from like 8.5, 9 up to its current level up near 12. That's a pretty big percentage move. Also note that on the very first move off the low, notice that the 8 EMA, which is the blue line, and the 21 EMA, which is the orange line, notice how they squeeze together. Okay, and then on the second move up, the 8 actually crossed the 21, and then the stock found support at the 8 and the 21. Okay, so very simple sequence. Okay, the MACD crosses, then it stays positive when you get one more dip, and during that one more dip, the stochastic cycles down and then reasserts itself. Very simple setup. Okay, here is SPXL, which is a leveraged S&P 500 ETF. Okay, it is a long ETF. The S&P's done very well. You can see it hit a new high last week, but nevertheless, there was still a setup to be had. Notice that as it was moving up, you got the MACD crossed down here. Okay, then the S&P moved to a higher high, but on that second move to a higher high, you got a negative divergence here because 1, you have a lower high over here, and 2, notice how the MACD came up, kissed its signal line, and then moved off it, and at the same time you got a kiss over there, the stochastic had moved up and then cycled back down. Okay, so it's a similar type of setup that I just told you, that I just showed you on the other side. So you get kind of a double bottom. Sometimes you get a higher or a lower low. You get a cross, and then you get a kiss, and at the same time you get a kiss, you get the stochastic cycles down. Okay, pretty simple setup, and you can see here that the S&P has fallen pretty hard since this one triggered. All right, another example. Here is the short triple Qs. Okay, Qs were doing okay, not fantastic, not too bad. They were mostly neutral. You can see we got a W pattern here, and then the stock took off. And the characteristic that outlines this setup here is you get a cross here. Okay, and let me delete that one. So you get a cross here, and then you get one more dip, and during that one more dip, the stochastic cycles down while the MACD stays positive. And then as you can see, we got a nice move. And to highlight, the first move up here didn't really bring the 8 and 21 together very much, but then the second move actually did. And other than that one day right there, you got support here at the 21, and obviously we've moved up. So we moved up from like mid-10s, 11, up to about 13. Not a bad move. Okay, one more example here. Here is TECS, which is a triple, it's a leverage technology. So it's not just semiconductors, not just the NASDAQ 100. It's just tech in general. So same setup. I know I'm beating a dead horse here, but if you look at a lot of setups, you can train your eyes to see these. And then once you see them, you can start playing them. Okay, so you got a double bottom pattern here. On the first move up, you got a cross. Then we get one more dip. And on that one more dip, you get the stochastic cycles down while the MACD stays positive. And then if you want, you could draw trend lines in here and say, double bottom, setup took place over here, and then we broke out there. Stock got above the 8 and 21, and then it continued to climb from there. Okay, very simple setup, Nothing fancy. So, just general comment here is to make it in this industry, you don't have to be a jack of all trades. You can clearly identify a single setup that works and that kind of clicks with your personality type. Then you practice that one setup over and over and over and get really good at it, and then you're set. You don't have to know everything. You don't have to get good at everything. I talk about this in my class. I also talk about getting a bias from a longer time frame and then zooming in with a shorter time frame to get entries. So right here in these chart examples, I've only shown you the daily charts. When I see these setups on the daily chart, I'll zoom in with the hourly chart in order to fine-tune an entry. And I talk about this in my masterclass. You ought to check it out. It could be a game changer for you. One good trade pays for the class, and then you'll have thousands of trades after that. All right, thanks for watching, and I'll see you next time.